Hello everyone, how we doing today? I was scheduled to go live inside of my private community, but due to some technical difficulties, I said, you know what, we're gonna go live on YouTube. So if you are caught by surprise that I'm on YouTube, hello. And those of you that were just with me on the Zoom, welcome back. I've got some updates that I want to share with you regarding the different banking strategies that we teach on this YouTube channel. And then I also want to share with you some updates in the background, what I'm working on, how I'm improving, different partnerships that I'm making, different additions, different things that I'm adding into the community to provide additional value to you. So with that, I'm just going to take it right to the whiteboard, not really waste too much time here. Again, appreciate you all being patient together. I say, you know what, we're going to go on YouTube. We're going to handle business, and the public will get to see. All right, so it's very important to always know your numbers. Very, very important. I want to stress this over and over again. Been working with a lot of new clients lately, and many of you have been coming to your first call not prepared. You're not taking enough time to just simply look at how much you're bringing in and what you're spending. I'm not concerned just yet about how you're spending your money and where you're trying to cut back or restrict or reduce. That's not my priority when I first start working with you. I want awareness first. I want to discover where is your money going and why. I want to bring awareness to the situation, and then we get to piece by piece sort of reverse engineer, see how do we want to live intentionally with every single dollar that flows through your economy. Okay, very, very important. So like I always say in my videos and even on my one-to-one calls, you have to know your numbers, even if they're bad numbers or what you would perceive as bad or irresponsible. It's, in my eyes, it's neutral first because I don't know the level of your situation. So I just need to know your numbers very, very clearly. What are we working on? What are we stuck on, right? Where's the money going? Why did it go there? How is it going there? All that, right? So money coming in, expenses, total debts. I want to see everything. I want you to see it for yourself as well so we can have that awareness. Oh, wow. Here's my amortization schedule on my car loan. Here's my amortization schedule on my IRS debts and my home loans, my student loans, personal loans. I want to get all that data. And then finally, my most favorite number, cash flow. What do you keep after it's all said and done, right? So once we know these numbers, I've got some really cool updates for those who know their numbers on this YouTube channel, for those that have been implementing a strategy even before you get to these advanced strategies, right? Those of you that have been fixing and building, rebuilding your credit, getting to that 720 or higher mark, okay? The 720 or higher mark, as it relates to credit score, puts you in a tier 1 position for lending. This is where you get to borrow money at the best rates with the best terms. The velocity banking strategy is critical in terms of the success of it, will most likely be based off of your credit score, where you're currently at, and what your current cost of borrowing is. If we have poor credit and we're trying to force velocity banking to work for your numbers and your debt, you may not be achieving the results that you desire. Okay, may not be getting to where you want to get to because you didn't take the time, the pregame work to what? Know your numbers, build credit, right? Get the debts situated a certain way to get our credit up, to repair that number so that we can find the best tool for your situation, okay? Extremely, extremely important that we understand that. All right, so for the 26 people in the house, let me know that you're here. Comment below. Let me know if you got questions. I'm going to take some questions after I share some updates on what I got going on here. All right, so in the velocity banking world, you've probably have been seeing it, maybe not even noticed it because you're brand new to it. But rates have been reducing on home equity lines of credits, personal lines of credits, and even some credit cards, okay? But where this is most valuable is in the HELOC space. So those of you who have homes, okay? Those of you that are trying to obtain a home equity line of credit in the first or second position, rates are coming down and intro rates are making a comeback. So I'm seeing a lot of promos on these HELOCs in the neighborhood of 3 to 6.25%. Some cases maybe a little higher, like 7%. And these are 6 to 12 month fixed intro rates. Some go as high as 3 years, what I've seen in some cases. And this presents a very attractive opportunity, especially if you're brand spanking new to the velocity banking space, okay? And if you're seasoned and you've been doing velocity banking for a while, then this just adds more speed to what you're already doing. For example, let's say you've been practicing velocity banking from 2022 till now. You've experienced some of the highest interest rates in a really long time, right? From 22 all the way to like mid 24, we're seeing people doing velocity banking with double-digit interest rate lines of credits as if that's normal. That's never been normal in my practice, okay? When I work with clients, I'm always trying to find the better rate, the better opportunity, the better term, the better deal, the better bank. I want to take that time of research and pregame work because does it make a world of difference, okay? So again, if you're someone that has been doing the velocity banking strategy from 2022 till now, and maybe you had a personal line of credit at a 10 plus interest rate or higher, or you've been with a home equity line of credit at a 9% interest rate or higher, okay? Now's the time to really consider graduation. Okay, you want to graduate. You want to move up from your current debt tool. You don't want to stay in the same position. Why? You're not married to any of these banking institutions, and they're not married to you. So you've used them for a time being. Consider upgrading, transitioning to a different bank. Is it going to be a little bit of a headache? Yeah, maybe. You know, having to move all your banking and move your paychecks over. But if I told you that it would put thousands of dollars back into your bank account, would you consider it? I think you would, especially if I can mathematically prove to you and show you and point to you the exact bank in your local state, city, county, area. So if you're watching live, at 36 people here, and you are looking for a home equity line of credit, right now, or you're looking for a personal line of credit, and you already have a debt tool, or you're brand new and you don't have one yet and you're looking for one, let me know the city, state, county that you're in, and we'll do some market research together. I'll show you how I do that research together. And again, if you're brand new, I have plenty of videos in a playlist all about the line of credit, all about the home equity line of credit in the first position, all about the second position home equity line of credit, all about the personal line of, so many different playlists that you can just hover over my channel, click on playlists, and I'm going to show you how to find these things, how to qualify them, etc., etc. But since you're live with me, you get the benefit of just asking me directly, and then I'll go work for you, right? Completely free. Didn't cost you anything, right? So in the velocity banking space, again, rates are going down and intra rates are making a comeback, right? And it's very like volatile. Like I was just working with a client this morning. We saw a bank in Georgia, 3.69 or 3.49% for 12 months, 90% LTV, no closing costs, flexibility, easy access to funds, transfers via online banking, checks pretty much all the boxes, right? 3.49% for the first 12 months. It's pretty insane. Not bad at all, okay? I have a lot of clients that, again, doing velocity banking since 2022, 2023, in an environment where interest rates were already high, so there wasn't a whole lot of intro rates, and even if they weren't around 3 or 6%. They were like fixed 7.5, fixed 7.75. Like that was high, and you've been rocking with it, getting results. Yes, great. Now it's time to upgrade, right? So really consider making the switch, especially if you have a personal line of credit or a home equity line of credit in the second position. If you have a first lien HELOC, you're planted, right? You did a major switch. You're planted. You're going to want to see that through, right? Ideally, right? Very rare do we want to refinance a first position HELOC because you have to go through all the closing costs again, and that can be quite expensive. But if you have a second position home equity line of credit or a personal line of credit, chances are the cost to obtain that tool was nothing or very, very little, right? And so switching is nothing crazy, right? Even if you have an existing balance owed on any one of these tools and you find a new one, they can simply, you get the new one, right? And you borrow from it and you pay off the old one, right? That's with a HELOC. If you go from HELOC to HELOC and there's an existing balance on your home equity line of credit that you currently have, you get approved for another one at another bank, they will automatically pay off that existing HELOC. That HELOC will close and you'll have the new home equity line of credit at whatever interest rate, all right? Extremely important that you look into that, okay? There's many of you that locked in interest rates back in 2021 or 2020, and your fixed intro rate is expiring this year, or maybe it already expired, same thing. If it jumped to a prime plus interest rate, okay, let me write that. If you are in a home equity line of credit and it's a prime plus 1, prime plus 2, prime plus 1.5%, okay, you had a fixed rate, you enjoyed a low 5, 6, 4% rate for the last 2-3 years-ish, and then it jumped to 9.5, right, or 8.75. Look at the terms of your home equity line of credit. If the standard is prime plus, that means whatever the rate is in the marketplace, you're always going to be at a higher rate than that. So if you are in a fixed HELOC, second position, and it expired, and now it jumped on you, prime plus, may want to look at a bank that is a prime minus with an intro rate. So you can like really ride these rates down and just simply take advantage of the opportunities. Why not? You've got the good credit. Okay, here in a great example, if you're someone like a Hector, right, who initially started out with 8.99%, okay, credit score went from 530 to 720. Not bad at all, right? That is a nice, healthy jump. So there's many of you that just simply start wherever you're at, okay? I don't always agree with that, but again, many of you are not my one-to-one clients, so I wouldn't even have you do that if you were my one-to-one. But if you were just going off videos that you're watching on the internet, just like this and other content creators, and we're educating you, yeah, go get a HELOC, go do this strategy, here's how it works, and you start off with a high interest rate, 8.99%, some of you like don't remember or you don't think like, how can I get this rate lower? How can I continue to reduce my interest cost to borrow? So in Hector's case, if you started out at 8.99% in 2022 and your credit score went up because you were doing velocity banking the last 2 years and you paid off a ton of debt, your credit score went up, your DTI went down, your utilage, right? Your consumer, what is it? Your utilization is down, okay? And you've got nice credit and you've got nice cash flow. Let's go see what other banks are doing. Like, go shop for these banks to obtain your business, right? Go shop around. It's gonna be really healthy. I'm telling you, it's gonna save you thousands of dollars. Easy, easy, all right? Especially if you already know the strategy. Right? If you're brand new, you don't know the strategy, I'm telling you, there's so much pregame work that you could be doing that could save you a ton of money, like knowing your numbers, where it's going, having that awareness, and then making small tweaks, be saving you a ton of money, okay? So those are the updates for velocity banking, and then I'm gonna come back and do some Q&A around that, and then research some banks for you, right? So that I can like basically prove to you like rates are reducing, interest rates are making a comeback, okay? Just by doing research live with you. The next quick updates that we got going on in the infinite banking world, those of you that are trying to obtain a properly structured whole life insurance contract that's designed for high cash value performance so that you can practice the infinite banking concepts, so that you can leverage. Maybe you're using that strategy to eliminate debt over velocity banking. Totally fine. It's nothing crazy, but little nice piece of healthy good news is that your dividend rates from these mutually held insurance companies, mutually owned life insurance companies, where you have a whole life insurance contract that's properly structured, the dividend rates are going up, they're increasing. So the internal performance of your policy is going to be slightly better. So for example, if you're someone that purchased a whole life insurance contract from a company like maybe Guardian, Mass Mutual, Lafayette, who else? I definitely would say those three. Maybe we could throw One America on that list, although I don't think they display their dividends, if I'm not mistaken. Maybe we could throw Penn Mutual in there, not sure. Emeritus, I think we can throw them in there. But basically, once you step into the infinite banking world, there's a handful, maybe two handful of companies, two handfuls of companies, probably 10 or less, that you ideally would want to work with to practice that specific concept. And from that 10, it's even less in terms of who you're working with, the type of agent that you're working with. They typically have, maybe 2 or 3 companies that they fluctuate between the two. And I'm specifically talking infinite banking, properly structuring a whole life insurance contract for high cash value performance to practice that strategy. You're typically going to end up with a Lafayette policy, a One America, Meritas, maybe a Penn, maybe a Mass Mutual, Guardian, okay? There are other good companies, but those are like probably like the top picks for a lot of these infinite banking practitioners. I just know off the top of my head regarding Mass Mutual and Guardian, because they're the first to declare it in 2024 for 2025. Mass Mutual's dividend rate increased to 6.4% from 6.1%. And then Guardian went to 6.1% from 5.9% in 2024. Okay. Now, here's what's super cool. If you're you're a client watching, you have 51 people in the house now. If you're a client watching, you've been working with me since like 2019, maybe 2018, maybe 2020, and we put a policy in place, your dividend rate was around where these numbers are right now, okay? So you experienced this if you bought a policy between like 2020 and 2019. Dividends on average were around 5-6+%. And most of them were like 6+% dividend rates. And then they started to like go down. Many of them started to go down. All right, I would argue all of them. All right. And then if you purchased a policy here between 2020 and let's say 2022, you purchased a policy where the dividends were at historic lows. So the fact that you bought a whole life insurance policy, if you're looking at whole life insurance with an investment pair of lenses, right? Then you can make an argument that you purchased a whole life insurance contract at the worst time possible, right? Because it's been at a historic low. But because you did not purchase your whole life insurance contract from 2020 to 2022 with an investment lens, you purchased your whole life policy with a understanding of the banking system and how saving money tax-free guarantee compounded over a long period of time, and not focusing on ROI and looking at all the other benefits that life insurance contracts whole life comes with, right? You were sold at a historically low dividend rate period. And now here's what we're seeing in the marketplace. You're now seeing the rates go up. So if you were illustrated, because in order to purchase a life insurance contract, you work with an insurance agent and they produce what's called an illustration, a life insurance illustration. And it'll project potential performance based off of that year's dividend rate, and they project that into the future, right? Without that rate ever changing. So I think what's super cool is whether you bought a policy in between 2018 and 2022, right? I think what's pretty cool is that your policy is likely performing better than the original illustration. And if your agent sold your policy correctly, give him a pat on the back, and he or she is going to be feeling great because they get to go to their clients and when they do their annual review, say, hey, we illustrated for this and the policy's doing better than what was illustrated. How nice is that? Okay. If you bought a policy in 2018, 2019 from me, And this is before I had this kind of knowledge, but I had no idea rates were going to go down the way they did. The dividend performances were going to go down. I didn't know COVID was going to happen, right? No one, I don't think, really knew that. So I was having conversations with clients on how dividends were going down. Some got scared when they heard that the guarantees within a whole life insurance contract were being reduced. And I had to remind them, I said, no, because you bought a policy before, your contract says 4% guarantee, that's what you're locked in. If you bought a new policy, you're going to be at a different guaranteed interest rate between like 2.5%, 3.5% on a guaranteed basis. So now we're in 2024 and dividends are starting to increase. So you could say if you were looking at purchasing a whole life insurance contract now, you're purchasing it at a nice time if we're just looking at dividends, which you shouldn't, right? That is a very, very small piece of the puzzle, very small, but it's still nice, okay? Hey, cool, right? Getting a little extra, percentage on my savings dollars that's gonna perform and, leverage that over time. So that's the updates that I have for you in the infinite banking space regarding dividends increasing and just the industry as a whole. I want to now transition to some of my community updates, me personally, what I've been doing in the background, right? Some wealth building strategies and some of the information that I've picked up over the last 1 to 2 years that I think is going to be a ton of fun. So one of those is I've been working on building a full financial service team within Finance Geek community. So there's some of you that are watching, such as Anthony and Jerry, and let's see, and well, no, Scott's not lifetime. He will be soon, more than likely. But there's some of you that are lifetime clients with me. What does that mean? That means these people decided to invest in my coaching program, and part of my full coaching program says and declares, and it's a covenant, it's a promise, that I'm going to work with that person till death do us part, right? I got to pass away, you got to pass away. One of us has to pass away for the contract, for the covenant, I should say, to end. The promise to work with you for life. There's no financial coaching program in the marketplace that I've seen to the degree that I'm doing it at that offers that sort of program. The only person, or I should say like group, that does that is United Financial Freedom with the Money Max account. They have a financial software that you can purchase, and it comes with lifetime access to that product, lifetime access to training and support. You'll always be able to access a live person. Are they going to be a qualified, certified financial coach? Probably not, but you do get some level of that coaching, right, for a long period of time. And then the Kwok brothers, right, Sam and Daniel Kwok, although you may not get them one-to-one personally with their accelerated banking program, but you do get their entire team. So you get an entire team of people that have been trained by Sam and Daniel Kwok on the accelerated banking concept and strategies. And when you purchase their program, you get lifetime access, right, to coaching and support and resources. Sam does a Monday call literally every single week, and Daniel does a call every single week. And so there's this ongoing lifetime support. Very, very rare you see that level of care and support on a lifetime basis. Is very rare. So if there's someone else that I missed, maybe you can tell me. But other than that, haven't seen anyone do that. So Jerry is a benefactor of that. Anthony is. So we're working together on a lifetime basis. So when, for example, when Jerry and Anthony signed up for my financial freedom program, my lifetime program, whatever I called it at the time, years back, the knowledge that I have today has increased. Right? I'm not just a one-trick pony, just teaching velocity banking. Right? There's so many other things that I've learned along the way, and someone like an Anthony and a Jerry get to like experience that and work together. So one of those things is building a full financial service team around me, other experts, other professionals that solve for different problems that pop up in our finances. The initial problems that most of you come to my YouTube channel for has something to do with the word debt. That is what I'm most known for, or what I get most popular views on, is either velocity banking or some sort of debt elimination video, right? And then credit, right? HELOCs, PLOCs, credit cards, you name it. So I'm initially solving that first problem. And once I help someone pay off a significant amount of debt and get their cash flow up and get their credit high and get their stewardship on point, the next problems that, or obstacles or challenges that present themselves is, Denzel, how do I invest more? How do I make more money? Legacy, estate planning, life insurance, passive income, guaranteed income. Denzel, my mom, my dad, my brother, my sister, like they start presenting new challenges for me to help them solve. Before, I didn't know how to do certain things, right? And I had to learn it. But now, over this 6-year, going to be entering 7 years in 2025, creating content on YouTube, been able to pick up a lot of good information, good knowledge, and even better, partner with people smarter than me in a specific area that I can just say, hey, Jerry, call, boom. Anthony, call, boom, right? Call this person, boom, they're going to set you up. And then you come back to me, you show me what they presented, and you sort of get the green light, right? Second opinion, look at this, yep, good. And it really speeds up the process. So I'm really excited about that. So that's really over here, like this full financial service team that I'm putting together and have been putting together are people that all know and understand the most popular strategies that get discussed on this channel: velocity banking and infinite banking. So that's always going to be me, right? Velocity banking, infinite banking, you're always going to get that direct support and attention from me, especially if you're a one-to-one client, right? Now, what if you're not a one-to-one client, you're just a follower of the channel, you want to do these strategies, you want to implement it, right? And maybe you resonate with someone else, like Sam Kwok, right? Or Christy Van, right? Well, my goal over the years is to like really collaborate with all these people, and I have been, right? So the Kwok brothers, I partner with them. Like I do my best to like really partner with good, solid individuals that really care about their specific craft that they want to master. So everyone I work with knows and understands to a degree those two strategies, and they're doing it themselves. So they'll be able to touch on it a little bit, but where those partners are really going to come in is for like different products, such as annuities, healthcare, long-term care, mortgages, first lien HELOCs, home equity conversion mortgages, right? Just understanding all these different financial products and how they add to your life, how they can benefit your life in particular seasons. There's going to be things that you do with your money that are going to be what I call a forever strategy. Like you will forever spend less than what you make. That should be a forever strategy. Spend less than what you make, and you will do 75, 80% better than Americans in the United States. You will outperform 75% of Americans in the United States if you simply spent less than what you make on a monthly basis. Like, hands down, you're gonna do better. Now, a particular strategy that's not a forever strategy, and I say this often, velocity banking is not a forever strategy. It's like a seasonal strategy that you implement for a period of time and then you turn it off once it's fulfilled its purpose and you graduate to the next thing. Infinite banking is a forever strategy. Think about it. Infinite is infinite, right? There are an infinite amount of ways that you can practice this particular strategy and it can be passed on for generation to generation. It's foundational. Velocity banking is like getting in a car and you're gonna hit the accelerator. You're gonna hit the gas. You're gonna press the gas and just gun that vehicle. You're just gonna drive like very fast. But should you do that forever? No, eventually there are gonna be some turns. Eventually you're gonna hit a red light, right? You're gonna have to slow that vehicle down, okay? But infinite banking is like the vehicle itself. You're always gonna need a vehicle in your life to get around, right? So velocity banking is not a forever strategy. It's an accelerator. It's like you hit the gas, press off, don't need it, hit the gas some more when you need it, press off, okay? There's been many scenarios, going back to velocity banking a little bit, where if you found the concept in 2018, 2019, at a historically low interest rate environment, and you were doing velocity banking, you did great, and you paid off a significant amount of debt that right when rates started shooting back up, and your HELOC went from 3% to like 9%, you were smart enough to either get out of that tool into another one or stop velocity banking altogether and just go back to debt snowball, extra payments. Because you were smart enough and you were a one-to-one client with me and I encourage you to do that. I was like, hey, we have exhausted all of the fuel that velocity banking could give us. We already got the head start. Now it's time to secure the win by turning off velocity banking. Just do debt snowball. Okay? Super important. So, coming back, wealth building strategies, full financial service team. I'm putting in people in place that can really solve for any financial problem that you're dealing with. Anything. Like anything that has to do with you using your money for some kind of financial product or service. I now, and going into 2025, have someone or a group or an organization that can solve for that need. And if you're a one-to-one client, we would have that conversation together, right? And it just expands into so many different conversations. And I, along with you, are documenting that process, okay? Now, outside of financial services, right, there are 3 communities that I am trying to build in the background with clients, okay? So this involves bringing in an expert or experts into a particular topic and then bringing clients that desire to become a master in that particular topic. So for example, crypto investing. How popular is crypto now in the last few weeks, few months, with Bitcoin going to 100,000 or more, right? Like if I was to look right now at my crypto account, okay, we got 60 people in the house. It's December 13th. It's 5:30 Eastern time. According to my crypto wallet, Bitcoin is at $102,239.49, and it just went down to $102,212.49. Like it's just, right, volatile. It's moving. But it broke 100,000, right? So that caused a significant amount of existing clients of mine, new clients, and people submitting contact forms. They're like, hey, I want to do velocity banking to invest in crypto. Or hey, I want to, build this infinite banking policy so I can borrow and go invest in crypto, right? Okay, cool. That's pretty awesome that you want to do that. So I don't claim to be an expert in crypto. I have my particular craft. I'm very good with the numbers, very good with the strategy, very good with the stewardship, very good with keeping the money that you make. That's what I'm good at. Then I make relationships with people who are good at making money in a particular area, right? Or have both, they've made a lot of money in that space or a good amount of money, but they're also really good at educating, like steps, not just showing how you can make money here, but like why you need to do it this way, why you need to set up a crypto account this way that's decentralized, why you need to have a cold wallet instead of just a hot wallet, right? And understanding all the terms and nuances. So I have a person for that. And we did a workshop recently in October where we spent 5 weeks, right? 5 sessions over 5 weeks, just educating my client base, specifically those that were interested in it, right? So if you have a genuine interest in something that can make you more money outside of your career or job, understand that velocity banking, infinite banking are like your foundational strategy, but these are not money making necessarily strategies. These are, it's using the money you already make, right? And then you're developing that skill to practice these strategies. And then you're like, Denzel, I also, once I have this, and this paid off, once I have this amount of cash flow, once I get to this point, I want to do real estate. I want to do crypto. I want to do trading, Forex, options, futures. I want to start a business. Denzel, I want to get on social media and become a person of influence and build a coaching practice. All wonderful. Now I'm going to be merging communities together. So you've got Finance Geek Community, which is this, right? My YouTube channel. And then I've got, clients and people that I work with one-to-one. Figuring out how to consistently show up in a way that sort of brings all these people together, right? And I'm thinking the best way to do it is probably just go live on YouTube and then bring in these experts and then do Q&As, right? And then have like private workshops, something like that, all online for the most part. And then have dedicated like sessions for specific topics that we can all build and work on, right? So crypto investing community, a trading community, and a real estate investing community. Those are the 3 main, I'd say most popular topics right now that the average client of mine has a genuine interest in. So again, I'm helping them on the initial problem. They have a debt problem, they have a cash flow problem, they have an income problem, they have an expense problem. We're solving for that first, helping them become a better steward of what they currently have already. And then once they get to a point of confidence to now dedicate time, money, and energy toward learning crypto, learning trading, learning real estate, I can now bring in that expert while simultaneously continuing to serve them, right? So that's what I'm working on, figuring out how to, connect those puzzles. But essentially all these strategies, whenever we see on the internet, all these wealth building strategies that exist are all solving for 3 things for your money to do. It either actively produces income for you, right? Where you are learning about crypto, you are actively learning, you are actively, say, trading, you are actively buying, and that produces, say, income. So you actively were involved, it created income. You developed the skill, you took action, that's the activity, that's the production of your activity that you decided to take, right? So all money does creates active income, passive income, or guaranteed income. That's all money technically does, and then you decide how you expense the active, passive, or guaranteed income that you make, okay? So a framework that I've come to the conclusion that these 3 different types of income solve for me. When it comes to active income, this fulfills purpose. So I, Denzel Rodriguez, run a financial coaching, consulting, counseling practice where I teach people how to become better stewards over the money, how to eliminate debt, how to manage debt, how to offset interest costs to borrow, right? How to become a creative borrower and lender, right? And so I actively do those things, and I create content, and I educate, and I do workshops, and I do one-to-one, and I do group, and I do all of it, right? That produces active income for me, which fulfills my purpose. It brings joy. Does that make sense? Comment below if that are you following that so far? So active income should fulfill your purpose in life. It should bring joy. It should bring peace. Some of you are actively working a career that you don't like, so therefore you think I need to find passive income streams to replace that job. And that's not a bad idea. I think that's great. Yeah. Make income. But don't forget about the activity in your life. Because I can promise you, traveling and vacationing and seeing family and spending money after a while gets bored. And I've not that I can honestly say that, but by talking to successful people, right? Whenever I've had the opportunity to talk to a multi-millionaire and they're still pressing the gas at their age, at their status. When I look at their status, look at their age, look at like all the wealth they have all the cars, they have the homes, they have the boats, they have the jet, they have it all, yet they're still pressing the dang gas. And I'm like, hey, when are you gonna let off the gas? And they're like, why would I? I'm doing what I love to do. And what I love to do just so happens to continue to make me a ton of freaking money. So a lot of us think, well, if I can just create enough passive income, then I can stop working. If you stop working in your life, you stop becoming. The problem is you think work means I'm doing something I don't want to do. A lot of us think that's what work is. Doing something you don't want to do. No, no, no. The true original definition of work is to become who you are. So if you're consistently becoming more of who you are and who you want to be every single day, would you ever stop? It's like you just decide to stop breathing. Why would you want to stop breathing? Right? Like you need to continue to operate. So if you think of it that way, active income fulfills purpose, brings joy, peace, happiness, love, all that. Passive income, okay, removes the required work you don't want to do. You don't want to do. Okay? Passive income, honestly, you get to define these things, right? You don't just have to go off what Denzel says. I think it makes sense, right? So for me, when I think of passive income, it's removing resistance. I should say that as well. Put that in the comments, right? It removes, reduce resistance, right? Like removes pain sometimes, certain kinds of pain, right? That it just removes certain obstacles in your life. Okay? And then guaranteed income covers needs. I would also say guaranteed income promotes longevity. So when it comes to guaranteed income, it's so interesting. I've been learning a whole lot about this from one of my partners. His name is Daniel Romberg. I've had him on the channel numerous times. He's an expert in that area of guaranteed income. Now, there's only 3 types of income that are guaranteed in life: Social Security, pension plans, right, and annuities. That's it. That's all you get. There's nothing else on this planet that has the word guaranteed income in it. Okay? There's things that are close to guaranteed, but I would put them in the passive income category. So real estate can produce almost guaranteed income because someone has to live somewhere. Everyone has to live somewhere. So it's about almost as close to guaranteed as you can get. Why is it not guaranteed? Because that tenant could leave, right? There could be times where you have vacancies, right? And the house needs to, you need marketing to bring in a new tenant, or sometimes the house needs repairs so much that you have to remove the tenant for the time being, right? To do repairs. So you forfeit income for a period of time, right? But real estate, and then you've got whole life insurance policies that can provide supplemental income, 401k plans, Roth IRAs, HSAs, right? 403bs, 457s, like all these can provide supplemental income, but not guaranteed income. Social Security, pension plans, and annuities are the only guaranteed income out there. So ideally, in your life, by the time you hit retirement, whatever age that is for you, by the time you hit retirement or a couple years after retirement, you want to be able to solve for creating enough guaranteed income that covers your needs so that you're not reliant on the active or passive work that you produce. So active income and passive income is abundance, right? It's the abundance factor that allows you to cover a lifestyle that you choose to live, okay? So the wealth building strategies that I teach on this YouTube channel, moving forward, are going to be keeping this in mind. What am I solving for? Active, passive, or guaranteed, or all 3, right? So that's what's going to be flowing through my mind. I'm going to have that flow through your mind and as you watch my videos. Always keep that in mind. It's a solid framework. I don't think anyone would disagree with this, right? And then it's just a matter of how you go about doing that. Will you go about creating active income by starting your own business and then investing in real estate passively and then buying annuities over time to guarantee income? Maybe. I know for me personally, I actively build a business on social media that produces active income and also passive income. And then I take the cash flow from the active and passive income and put it into more passive income assets or vehicles such as crypto, such as real estate over time, and such as other people's businesses, other people's products and services. And then once I get to a certain age, then I'll start purchasing annuity contracts. Once I get to like 50 plus, I'll start purchasing annuity contracts that guarantee me income according to my cost of living, my needs, right? Because money has to reside somewhere. And one of the most safest places to park money is in life insurance companies. Life insurance companies sell insurance, all right? Protection. So what are they protecting? Life insurance companies are either protecting my life or protecting my money. When I buy a life insurance contract, it protects my life. It protects the value I bring to the marketplace. And if I buy an annuity contract, it protects my income. It protects my income from never running out so that I outlive my money, right? Sorry, other way around. So that my money outlives me, right? You want your money to outlive you. You don't want to outlive your money. And so many Americans today are in a retirement crisis because they're consistently outliving their money in their 70s and 80s, and they're trying to figure out how to stop the bleeding, right? They're trying to either actively figuring out how to not outlive their money. So they try to spend less, try to pay off debt, and not realizing that there are financial products that literally remove those key risks so that you can live a more joyful, active life in retirement. Okay? So those are all the updates for you personally. And now I'm going to go back into the comments. We're going to go back up to the top. And I'm going to look at the city, state, and county that some of you were asking about. And because you're looking for a debt tool, you're looking for a line of credit. So we're going to go to Gwinnett County, Georgia. So let me share my screen. I'm going to show you exactly how I Google search. I use Google to search for exactly what Joshua is looking for. Now, what would also help me, if you're still here, for the 50 people watching live, put the city, state, county, and the type of debt tool you're looking for. Is it a credit card? Is it a HELOC? Is it a PLOC? First, second position? What exactly are you looking for, right? So I'm going to assume for Joshua that he's looking for a home equity line of credit. So let me go ahead and share my screen so that we can dive right into this. I'll show you exactly how I do my search. Now, mind you, I'm in South Florida, so Google knows my location, and so it's not going to give me as many options as if I was actually in Gwinnett County. So also keep that in mind, that your search will be a little bit different from mine, but your search will be better because you're searching like right in your area. And I have a video. Let's go to the video. How to find the right line of credit. How to find the right HELOC. Okay, this is gold. People charge money for this. Okay? And you're gonna get it for free. And I've done it before, and I'll do it again, and I'll keep doing it because it's fun. Right? So that's the link right there. You'll want to watch that video. That will save you so much money. Here's the other one. Velocity Banking, how to find the right line of credit. Copy that one. And I'll put that in the chat as well. Completely free. Didn't have to pay for it. How nice. Thank you, Denzel. You're very welcome. Back to the search. So, I'm always looking for credit unions, okay? And as you can see, look at my search, right? You can tell I was like looking up credit unions with clients. This is all I do all day long, is just like search up credit unions. And guys, like it only takes like 20-30 minutes to build a list of banks in your area. And then you call those banks and you ask questions, right? Like that's it. You take out all the guessing work. It's so much fun when you don't have to guess. So I just look credit unions in Gwinnett, 2 T's, County, Georgia, that offers HELOCs with an intro rate. Like you can get really specific. Let's see what the heck pops up. Envision Credit Union. Let's click on it. Introductory rate. Go to the bank. Look, it took me right to it. And I'll zoom in for you. Check this out. Introductory promo rate, 3.49% for 12 months. Then it goes to a variable low rate as low as 7.75% after. No closing costs. Get access to a loan fund you can tap into anytime you want for any reason at all. Pay interest only on the amount of money you've actually used. Instant access to money through checks, digital banking, and at Envision Credit Union locations. Borrow up to 90% of the equity in your home. Good choice for making periodic payments such as tuition bills or paying down higher interest, or aka doing velocity banking. Prime rate of 7.75% is accurate as of November 8th, 2024. Okay, so this might be inaccurate at this point because it's December 13th. Right, so they haven't updated their site just yet. Okay, now there's a little caveat. I went over this with a client earlier this morning. Here's the caveat. There's a minimum loan amount is $10,000, right? With a minimum initial draw amount of $10,000. Meaning, if you were to go with this bank, whether you live in Florida or Georgia, because that's where they have their branches, so this is exclusive for Georgia residents and Florida residents, that if you were to get approved for this home equity line of credit, you are going to have to initially withdraw $10,000, right? And then $1,000 thereafter whenever you withdraw money. So their minimum to withdraw each time is $1,000. Okay, no big deal. A lot of you get worried about that, especially in the state of Texas, right? A lot of you get confused sometimes with that whole minimum withdrawal amount. And there's an easy way around that. And so let me give it to you. Let me give you that easy way around that. I'm going to clear some space on the board here. We're going to have some fun. All right, check this out. So anytime the bank requires a high transfer amount, $1,000 to $4,000. So specifically, this is only Texas. I've never seen any state do this. So only Texas requires a $4,000 minimum withdrawal out of a home equity line of credit, right? So if I was to illustrate that, you got your checking account where income goes in. And then you have your home equity line of credit. Okay? And they're both at the same bank. Okay? Same bank. Money lands in your checking account. You make a transfer or a payment. It's considered technically the same thing. So all your income goes into the home equity line of credit. Then you transfer out money back to your HELOC, and you're going to pay bills, expenses, debts, right? Some banks, not all banks, some banks allow you to pay bills and debt payments directly out of your HELOC. Those are fun. I like those. But not all of them. So therefore, we need that connection to the checking account, which is why I tell you, get it at the same bank so it's instant money in, money out. Now, a bank like Envision Credit Union is saying, hey, if you're going to withdraw money after the initial $10K, right, and you're going to withdraw money again after that, it has to be a minimum of $1,000 each time. So you pull out $1,000, but let's say you don't need the $1,000, you only needed $500 to pay a bill. So now you have $500 left in the checking account on that same day. Although there's a limit to the amount of money you need to pull out, right? There's a limit, $1,000 minimum transfer amount. There's no limit on how many payments you can make to the HELOC. So you can just make a $500 payment back into the HELOC because you on Friday only needed the $500 to cover certain bills for the next few days. So you stick the $500 back in and you only get charged interest at the end of the day for owing $500, not $1,000. Same thing with the $10,000. The Envision Bank might say, okay, the initial withdrawal amount is $10K and you have to owe this. I'm not saying it says it on the website because I didn't see it, but let's say that you had to owe $10,000 for at least 2 years, right? What they're actually saying is you only need to owe $10,000. The initial $10,000 cannot be paid off in full in the first 2 years, let's just say. Well, if I pay $9,999.99, did I pay off the $10,000? No. So I won't be penalized because as long as you don't bring the HELOC balance to zero, you always keep it running for the first 2 years, and that's likely going to be the case if we're doing velocity banking over a period of time, then that's how you get around that problem. Same thing in Texas. If you had a $4,000 minimum withdrawal and you only needed $2,000, so you withdraw $4,000 on Friday, you throw $2,000 back in. Literally, the minute you took it out, you throw $2,000 back in. You keep the other $2,000 out, you pay your bills over the next 3, 4, 5 days, and when you need another $1,000, $2,000, you withdraw $4,000, you put back $2,000, and you spend $2,000. It's one little extra step, right? It's an extra manual step that others with a home equity line of credit didn't have that problem. You just have that extra step. That's all. That's all. Nothing crazy. Nothing crazy, right? So let's keep going. All right, we're going to speed this up a little bit more. So Georgia and Florida, Envision Credit Union sounds like a pretty nice bank to go check out, right? And this may be incorrect for the person that I'm searching for, right? So keep that in mind, Mr. Joshua, that Envision Credit Union may not necessarily be in Gwinnett County, but it is for sure in Georgia. And that's okay. So keep in mind that, we don't have to go with a local credit union. I'm just saying typically that's my preference, to stay local or at least within the state. And if the bank is branch location is not within driving distance, that's not the end of the world as well. We can work around that. We may not need to ever even go to the bank. Okay. So let's see. We got Georgia United Credit Union. Let's see what they got. Now again, when I'm searching for these banks, right, some of them take me right where I need to go. But I'm going to click on Georgia United Credit Union to give you an idea of what I'm looking for. All right, so when I go to a bank's website, I'm looking for the word borrow, I'm looking for the word loan, I'm looking for the word mortgages or home equity line of credit or personal line of credit. Sometimes the bank will not even show that option that we see right there, home equity line of credit. But because it does, we'll click on it, right? And it's going to take me directly to their information about their home equity line of credit. All right. And they're going to give us some general information, but they're not going to give us all the information. And you have to be careful because this information may not be accurate by the time you actually go to apply, which is why I tell you all, call the bank before you apply, right? Like, actually talk to them. Don't call to apply, call to gather data and information about the product, right? So we can get some initial information about this product that they have credit lines anywhere from 10,000 to 500K. You can borrow 90% of the LTV. You're able to have a 10-year draw period. They have interest-only payments available. Home equity line of credit, 7.25%. Another good search for you to do is to ask what is the current prime rate. Current prime rate is 7.75%. It last changed on November 8th, 2024. Okay? So if prime is 7.75% and you're someone right now with a home equity line of credit that's higher than 7.75%, you've had it for a year, 2 years, 3 years, whatever it is, and it's not a first lien, it's a second position home equity line of credit, you may want to consider switching banks, okay, to save you money. So you keep that search open when you're searching. And you say, okay, well, look, 7.25 is below 7.75. This checks one of the boxes, right? Okay. Look at more information here. Tells us exactly what I'll need. Driver's license, pay stubs, IRS W-2s, tax returns, 2 years, most recent mortgage statement, homeowner's insurance declaration page, current property tax bill and statements for all properties owned. Okay? So, it tells us exactly what we need. Schedule an appointment, call. Get the information ahead of time. Don't guess. Okay? Don't guess on this stuff. It's not crazy. And then you're going to look at closing costs and the fine print. I'll scroll. Depending on combined loan to value and estimated third-party fees, typically ranging between $0 and $2,750. Okay, here's what I typically notice. That when I find a bank with a relatively low interest rate or below prime, usually the catch, right? Because usually there's a give and take everywhere. There's usually a give and take everywhere with every bank. So just keep that in mind. What's the give? What's the take? They're giving me a low rate, but I may have higher closing costs. If I have a higher rate, I might have zero closing costs. If I have a very low interest rate period, I might jump to a prime plus afterwards. So you're just going to measure it according to your current finances. If you're someone that has really bad credit out the gate and you're sitting on debts that are charging you double-digit interest rates, 10, 15, 20+% across student loans, personal loans, credit cards, car loans, and mortgages that are all higher than the norm, right? Then going with a higher interest rate home equity line of credit may not be the worst thing in the world for you to do in that particular situation, right? Because you can make an argument whether I get this HELOC, I'm just trying to get approved. I'm trying to build my credit enough to get an approval towards something, right? And then move forward. You're going to be able to get results because you're consolidating that higher interest debt to a lower interest rate HELOC that's maybe at 9% compared to your double-digit interest rate loans that are amortized. But if you're someone with an 850 credit score and you have a mortgage at 2.85%, and you have a car loan at 1.9%, and you have student loans at 4%, and that's it. It's going to be really difficult to find a home equity line of credit that could match or get anywhere near those rates. And if you have high cash flow, I might tell you straight up, hey, velocity banking is not for you. It's a mathematical problem we're solving. It's not an emotional thing. We shouldn't be saying I want to do velocity banking because Christy Van said I should, or Denzel Rodriguez or the Kwok brothers, right? That's not why you should be doing velocity banking, just because it looks cool, sounds cool, smells good, looks good. No, it's a math problem. Solve the math problem, take the emotion out of it. If the math don't line up, you don't do it. Simple. There's other strategies that we can implement. Infinite banking, debt snowball, cash flow index, debt avalanche. Nothing crazy, right? All right. Let me go to another state. We got Los Angeles, California. He's giving me the zip code. Yeah, let's do that. And we're just gonna look. Easy. Nothing crazy. All right. Let me go back for my Georgia people. Look at this list right here. Right. Jot that down. And then I'm gonna search credit unions, Los Angeles. Look at that. Credit Union of Southern California, 3.99. Let's see what they got. 3.99 interest rate for the first 12 months. Okay. Borrow up to $250 at 80% or $500,000 at 70%. Funds within 30 days. Interest only available to keep your payment low. Okay. Cool. California Credit Union, let's see what they got. Another 12-month introductory rate. California Credit Union, view rates. See that? Home equity line of credit, 80% LTV, 10-year draw, 5.99 interest rate for 12 months. After that, goes to 7.75. What's prime? 7.75. So that means based on that bank, they're charging you 7.75 plus 1%. So that is prime plus a point. So they give you the little teaser rate, 5.99 or 7.49. Notice how if you do 100% LTV, all right, 80 to 100%, typically the bank will make up for what they're leveraging on your property and just charge you more points. Okay. Some people, again, this is case by case. Some people just might want to have a bigger line of credit because they're trying to do something, an investment. So they don't mind that extra 2.5 points being at 10.25 because they know their total net cost of borrowing in a year would be 5% because they're doing the strategy right. So in that case, okay, no big deal. But just keep that in mind. Like if I don't need all that equity when I'm first doing velocity banking, might as well go with the 80% LTV or under and not have to pay an extra 1.5% in borrowing costs. All right, so they go out the Wall Street Journal prime plus a margin. Again, you could be someone that says, all right, I'll do the 5.99 for a year, and then I'll switch out of that bank. I'll go somewhere else. And that's not against the law. I could do that. Look at all these banks. I can't tell you how many people tell me, Denzel, I can't find a bank. It's so hard. I'm like, no, it's not hard. We just need to take the time. So if you're watching me live, all right, we got 41 people in the house, and you're trying to find a bank the best thing you could be doing right now is researching with me and then put it in the comment section. Like, let's go to work. So we're looking for a line of credit, home equity line of credit. They have a signature line of credit for mortgages. Here we go. See rates. 7.75%. They don't add points. So it's just the prime rate, adjustable rate line of credit. Let's see. 15-year repayment, so it has a 10-year draw, 5-year repayment plan. Okay. The idea is that if we're going to do velocity banking, we need to do it within that draw period. You don't want to have a large balance in year 10, and then your HELOC closes, turns into an amortized payment for only 5 years. Okay, we don't want to do that. All right. What is the prime rate on HELOCs in 2025? Well, we don't know that yet, right? But we know for right now it's 7.75%. Okay. Just gonna scroll and just kind of see what you guys are typing. Will you have actual programs to go through in crypto, real estate, etc.? Yes, it's gonna be most likely ran by other people, and maybe I host it. So I've done that before. What I'm going to do is basically, if you're a lifetime client, there's not going to be any additional charges for that. So I'll cover something like that. And then when I bring in experts and whatnot, if they have their own program, they have their own price, and that's their own thing, right? Yes, 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 be recorded. Orange County, Florida, first position HELOC. So there are 3 banks that are popular for the first position HELOC. You've got First Savings Bank, All-in-One Loan with CMG Financial, and University Bank. Okay, those are the 3 most popular banks that offer a first position HELOC that comes with a sweep checking account function, or the sweep feature, which simply means that by 11:59 p.m. every night, whatever amount of money you have in your checking account will get swept into your HELOC, bringing your checking to zero, keeping as much money in your home equity line of credit as possible, and that reduces your net borrowing costs. Okay. All right. Deidre is looking for a PLOC in Tarrant County, Texas. I don't have enough equity just yet for first lien, but talk to Harrison. Hopefully we'll be in a position to do so within the next year. Cool. So we already talked to Harrison. In the meantime, we're looking for a personal line of credit. Understand this. PLOCs are most likely always going to be at a higher interest rate than your home equity line of credit. All right? Let me prove that to you. Let's do this. Credit unions in, where did she say? Tarrant County. Did I spell it right? T-A-R-R-A-N-T County, Texas. That offers personal line of credit. Personal lines of credits typically, I've never seen one that offers an intro rate, so we're not going to put that in our search. Tarrant County Credit Union. So we're looking at loans. Line of credit. Credit line up to 10K. Let's see if they give the interest rate. See it? View our rates. See that, Deidre? 12.9%. So this is typical. It's very hard. I'm not even gonna lie to you. It's very hard to find a personal line of credit under 10% today. In today's interest rate environment. It's not that easy. So what I've been saying this year is that HELOCs below 10% are an amazing find. If you get it, wonderful. I like to stay at 10, 10.5, 11. You know, once you start throwing me into 12, 13, 14, 15, most of the time, depending on what debt you have, it's going to be a no deal for me. So in Deidre's case, she's wanting to do a first position home equity line of credit. The rate is most likely going to be in the 7 to 8, 9% range on that. So in the meantime, what should she be doing? All right, well, she's wanting to get a personal line of credit. Well, do I want to use my credit right now to apply for anything if I'm trying to position myself for the first position home equity line of credit? How much damage do we really think we're going to do with a HELOC in the double-digit range, depending on whatever debts Deidre has, right? So we want to keep that in mind. Are we forcing velocity banking? Is that a potential that we might be forcing velocity banking? This is me. If I know I want to get a home equity line of credit in the first position, I'm not using my credit for anything. I'm simply going to snowball my debt. I'm simply going to make sure all my bills are paid on time. I'm going to do a credit report over the 3 bureaus, see if there's any delinquencies, negligences, anything that needs to get fixed, right? I need to be clean before I make that application for first lien, because the first lien HELOC is an extensive process and it has fees, okay? Important, very, very important. So Amber says, it's been difficult finding a HELOC for my house in Missouri City, Texas. Apparently there's something weird going on in Texas with that stuff. Has anyone found a workaround? Any preferable lender? So I did talk about the workaround. We're good there. And then she's like, boom, as soon as you write this, starts talking about it specifically for Texas. Cool. So we solved that second part. Wonderful. Missouri City. Let's take a look, see what they have. Let's do, why is my screen not sharing? Okay, now we're good. Take that off. All right. So let's do, well, Deidre, just for giggles, we could look at a couple other banks. You got TECU. Before I go to the next state. Well, this is still, I think Amber's in Texas too. Okay, so I'm gonna stay over here. Amber's looking for a HELOC though. Okay. Boom. Rare commodity. Rare commodity. Look at that. 12.9. You see, this is a perfect example. Weren't we about to just close the books on Texas with personal lines of credits? Did you see that? Did you see how even I was like almost ready to give up? Boom. They have, oh shoot, am I reading this wrong? think it's a loan. I might have spoke too soon. It says a cash stash line of credit. Okay, no, we're good. Cash stash. That's funny, like the names they come up with. From TDECU. 0 collateral required, borrow up to $50,000. And the interest rate is as low as 9.74%, but you have to be tier 1 credit, most likely, to get approved for that, right? But it's things like this that we're doing right here, right now, that I know is going to save people thousands of dollars, right? That if we were to just do the pregame work, right, study in advance, you're going to save so much time and dinero. You can save so much money. You kidding? Oh, look at this. Enjoy a 0.25% discount on your interest rate when you set up a recurring direct deposit into a TDECU checking or savings account. Guess what? If we're doing velocity banking, you've already checked the box on that. We don't have any issue doing that. Isn't that nice? How nice. All right. Now let's help Amber. She's in Missouri, right? Missouri County City. Oh, but she's looking for a HELOC. Let's change that up. Offers HELOCs. Why is that popping up? Let's do city. Whenever it's sponsored, you see that in your Google search, probably want to, those would be like the last places I look at. I don't love it. They put too much money in their marketing. So they may have higher rates. But I do know about Welby Bank. I was just talking to someone about them today. So Welby does a first lien or second lien, 7.75%. Do you see this, Amber? So it's an adjustable rate mortgage, right? It's at prime without the addition of points. And you get a nice little intro rate, 6.25% for 12 months. Not bad. It's a very good head start. So that's on a first or second lien with Welby Mortgage. Then it says second lien. We're going to have to clarify that. You're going to have to call the bank and clarify that. What does that mean? First lien or second lien with Welby Mortgage? Is that, like, that just means I'm getting a HELOC with you, right? Like, I don't have to already have a mortgage with you? That's what I'm assuming. Because then it says second lien, 8%, so it's a prime plus 0.25%. Same thing with the 6.25 fixed rate. Let's see if they have any closing costs. Consolidation. Okay. Got that convenient access to checking, which is good. Okay. So that's one. Take your notes. Again, that's a bigger bank, more than likely, because they got that sponsored stuff here. But if you scroll down, we might find something better. Let's see, top 10 credit unions. We got that TD-ECU. Let's go back to TD-ECU because we were just looking at their personal line of credit. Is it website? Do they have home equity? Let's see. Specialty loans. It doesn't look like they offer a home equity line of credit. And when they say top 10, it's not really top 10. It's the top 10 banks that paid to be there. So you got to do better research. Let's look at Credit Union of Texas. Again, you're always going to want to look at your local and state credit union non-for-profit banks before you go with a major bank. You are more than likely going to get a much better rate and terms. So we got Credit Union of Texas that does offer a home equity line of credit. Interest only. Available funds are tied to the equity. Okay. Page that. Whenever you see these little paragraphs, this is where they store a lot of good information for us to know. All right. So you see that in Texas, the initial advance draw period is $4,000. Property insurance and flooding insurance were applicable. Okay. Ooh, what is this? What does that mean? See that? There is a 12-day cooling off period on all HELOCs. Other restrictions may apply. In Texas, there's a 12-day. There is also a 3-day right of rescission after closing before the funds may be dispersed. Actual time of funding may differ from da-da-da. Okay, that's just talking about when you initially close. So there might be some closing costs. So Amber, if you were to call this bank, that would be one question you want to find out. What does that mean, the 12-day cooling off period on all HELOCs? I'm assuming that is only referring to the first like couple weeks of getting your HELOC. Like you're not going to have access to it really, even though you got approved. That's what I'm guessing that's what that means. You got 5 or 10 year draw periods. They did not display their rates. They did not display their LTV. So some banks don't give a whole lot of information up front. You gotta call and ask. All right. Let's see what else. Am I looking at Missouri? So Missouri is over here. So it's a TD-ECU right there. First Community Credit Union. Let's see what they got in Siena. Let's go to them. Loans. Got Home loans. Let's see. Let's go to rates. Home equity line of credit. Vary between 11.5% and 18%. Not too cute. WellBe is winning at the moment, right? So we're going to skip them. Take that off your list. No good. What's this Brazos? Also, guys, say for example, let's say Amber was in the military. Let's say Amber is a nurse, or Amber works for the government. Okay? Always look at employee credit unions, police and firefighter credit unions, military credit unions. You guys, specifically with those specific careers, there's credit unions dedicated just for you. And so therefore, there's going to be some lower interest rates just for you. Okay? So keep that in mind as well. If you're someone in the chat, you're looking for a home equity line of credit, catching the replay, you're looking for a HELOC, you're looking for a PLOC, and you are a veteran, you are a police officer, firefighter, nurse, you work in the hospital industry, maybe construction. Sometimes if you're in a big construction company, they might have a credit union of their own. Okay? And that's going to be very, very helpful. Okay? So just keep that in mind. So this says Brazos Valley Schools Credit Union, right? So if you're a teacher, there's also some credit unions just for you. And sometimes they got some good stuff. Again, we're always looking at, the word loan, home loans, right? We're going to look at their rates and fees. So they have a line of credit. Look at that. So if you're in Texas and you're looking for a line of credit below 10%, I already found you 2 banks. One goes as low as 9%, the other one is 9.74%. This one is a 48-month term, right? We just don't know, how much they will lend us, okay? They don't say. But you would call and you get those details. Home equity line of credit, 80% LTV, 20-year fixed rate. So you can get a fixed home equity line of credit if you're an educator in the state of Texas. 20-year fixed rate, 7.75%. You might be someone that, I don't want to play with the adjustable rates. 7.75% is pretty much lower than all my other debts that I have combined, except for maybe my mortgage. If I can lock in that rate, cool. So I don't know if that's their only option, fixed. They probably have adjustable, right? But that's prime. Let's see. The first 5 years, interest-only payments, okay. It's revolving. It's good. And they don't give us too much details after that. Again, you got to call. But you see how Brazos was like way below in the search? Let's look at Primeway Federal Credit Union. Let me know if this is extremely valuable for you guys. All right, so I'm just giving you all the goods here. Home loans. HELOC. Okay, line of credit. Let's do learn more. Approval. 8.75. Prime plus, right? So that's why that's 8.75. 5-year draw period. we got closing cost of $740, application fee of $500. So it's not that cheap to obtain this line. And it's prime plus 1%. And it's only 80% LTV. Okay. And it's only a 5-year draw period. So when you're looking at banks, there are, you know, these typical details that we're looking for, that we want to, you know, sort of check the box off. Right? So let's write that out. What do we want to have if it's the perfect HELOC? And then your goal is to try to check as many of these boxes off as you can, right? So the rate, prime or prime minus percent. No closing costs. No annual fee. Intro rate. Six to 12 months. Online banking. Right? Easy access to cash. Via transfers. Important. This, very important. I would rather get a higher interest rate on a HELOC and have access to online banking, transfer of money instantly, than to have a lower rate HELOC without this feature. I would trade all these features to have that one feature, because arguably this is the most important thing. Arguably. The intro rate period is an ancillary benefit. The no annual fees part, typically the annual fees are only at $50 to $100. Closing costs, typically $500 to $1,500 plus. And then prime plus is usually a point to 2.5% above prime. So I'd be willing to trade all that just to get this. But luckily, you live in the United States of America with thousands and thousands of banks. You don't have to make that decision. You really only have to sacrifice maybe 1 to 2 of these things. Because there are banks that will give you a prime or prime minus, little to no closing costs, little to no annual fees, an intro rate period with online banking, easy access to cash via transfers, not checks. You can legit find that, right? And I proved it to you earlier, okay? The other detail is the LTV, okay? The higher the LTV, the more equity we have to work with, okay? That's basically all it is. So if we can get anywhere from the 80 to 90% range, that's cool. But just understand that the lower the LTV, the lower your interest rate may be, because it's less risk on the bank that they have to take, right? What do I mean by that? Say you got a $500,000 more valuation on your home, and you owe $275K, and they're going to do a 70% LTV, right, minus what is owed. So 225, and they'll lend 70% of that, 157,000, right? So 225 minus 157,500, there's still 67,500 equity unused, meaning the value of your home would have to drop $67,500 before the bank gets scared and freezes your home equity line of credit. Does that make sense? And by the time your home decreases by 67,500, the overall value of your home might have increased over that time frame, plus the balance that you owed on the 275 might be a little bit less, and you might, and under no circumstance should we ever max out our home equity line of credit. Make sense? That's important. Very, very important. All right. Let's see. Teacher said her debt was $480,000 at 6.99% and 800 FICO. Yeah, a first lien position home equity line of credit is going to be pretty attractive for you. So I would dial in with Harrison on the all-in-one, because by the time you're ready, we might have a lower interest rate with the all-in-one, depending on if rates continue to go down. I think in the meantime, I wouldn't apply for anything. Wouldn't apply for a personal line of credit. There's no need, honestly. And Deidre, if that's your only debt, I definitely wouldn't apply for anything. I would just either just save my money right now, and I can either pay into the home, because you know you're going to unlock all that equity with the all-in-one. So you could be saving your money inside of your home right now. Just make extra payments. Just start knocking that down. Boom, boom, boom. Create more and more space. If there's other debts that you have that we could maybe eliminate, that would give us a credit boost, I'd consider that as well. Okay. It's important. Let's see. Let's see. Looking at some questions. I want to see another state. Long Beach, California. Find new HELOC. All right, and then we got LA. All right, we can go back to California. Let's do that. Let's go back to California. So this was Texas, right? Let's go like this. So that was Prime Wave Federal Credit Union. I want to see if there was another attractive bank in here that, let's see what First Franklin is doing. When you see a website like this is also like a little bit of a red flag for me, because they may not have a good mobile banking app. It's like, you're like, where do I go on here? It's not the most user-friendly. I'm not seeing anywhere where it shows their products. Okay. So that was Missouri. So we did Texas, we did Georgia, we did a little California. We'll go back to California. Credit unions in Long Beach, California, that offers HELOCs. Let's see what LBS Financial Credit Union has. %, 10 to 300K. Great rates. Few rates. $7.75, 8%. It's just prime. Are available to borrowers with excellent credit history. Right? Pay attention to that. Okay. Special home equity line of credit, intro rate 5.99%. Current APR, intro 8.75. So they got 5.99 for the first 6 months, and then it's prime plus a percentage point. So notice how they gave us a teaser, but we paid for it on the back end, prime plus 1. LTV was 80%, not bad. We got a 10-year draw. We got interest-only payments. Okay, so checks some of the boxes. Do they have a closing cost? I don't see it. Estimated closing costs are $1,500. The closing costs would be deducted from the first draw at close of your loan. Okay, so it's not like we had to come out of pocket to pay the closing costs, but it did come out of the line of credit. Right. So if we were to kind of look at our checklist here, we say, okay, you know, is this a viable bank? You know, maybe, right? But how many boxes did it check, right? It doesn't check the prime, right? It's prime plus. Closing costs was at least 15. So it's above or right at the high for closing costs. Then check that. I didn't see an annual fee, right? It has an intro rate, 6 months. And I believe, so it, you know, it checked the LTV box. And we don't see exactly on here, but I am willing to bet that you can access leverage equity home, access extra funds at a low rate whenever you might need them. Simple withdrawals, it says. With LBS Financial, you get access to your home equity line of credit through complimentary checks, phone transfers, and or online banking service. So it checks one of the most important boxes. So see how it checks 1, 2, 3, 4, but it comes at a cost. We have some closing costs, and we have a prime plus 1% rate. So is that an attractive home equity line of credit? You could say yes, depending on your situation. But I would say, can we dig a little deeper, right? Could we maybe find another bank that could do better than that, right? In or around Long Beach, California area? I think so, right? So that was LBS, okay? Let me know if this is good. Let me know if this is like really valuable, okay? This is a deep masterclass training on, you know, finding HELOCs in your area, right? Because that's the main thing, right? You get the debt tool. This is part of the pregame work. If you do it right out the gate, you're going to be ahead of so many other people that are trying to pay off their debt faster, right? Or compared to the traditional way of getting out of debt by just making extra payments. Not to throw that under the bus though, because that's going to be pretty valuable as well in the pregame work. Let's look at Star One Credit Union. I don't think we looked at them. $7.75. No closing costs, up to $250. Check the rates. Maybe I can go to the, want me to put in information. Oh, here we go. Okay, here we go. We're doing a direct comparison now. No annual fee, no closing costs. HELOCs up to $250,000, withdraw funds as needed, open-ended 10-year draw period. Interest rates adjust quarterly, January, April, July, and October on the cycle period. Okay, let's see. And then we knew that the rate was 7.75, so it was prime, right? California. Okay, so let's take it to the whiteboard. So look at what we're doing. We're comparing two banks in the state of California, and we're comparing how many boxes it checked. So it checked the prime minus or prime box. So it has a prime rate, 1 check. No closing costs, 2 checks. No annual fees, 3 checks. Did it have an intro rate period? It did not. You see how there's always like a give and a take? So it didn't look like they had an intro rate period. Right? So it didn't get a checkbox on there, and it got a check on easy access to cash via transfers, and it got the LTV check as well, right? What else did it get a check on? That's it. So 1, 2, 3, 4, 5 checks. The other bank, 1, 2, 3, 4 checks. This bank has more checks, checks more boxes, helps you narrow down which bank you want to go with in your particular state. We're looking at California, right? And we looked at 2 banks so far, and we just compared them side by side based on the features that we're looking for to practice the velocity banking concept efficiently, okay? And this is the pregame work, right? So even though this has been a 2-hour-long video, but we didn't actually start doing the research toward the tail end, and I looked at 3 different states, right? So if you live in that state, even if the bank is nowhere near you, that's not a problem because of the mobile online banking. And if we're doing velocity banking, there's no circumstance where we ever really need to go to the branch location. If we ever need cash, there are ATMs that bank shares with other banks. You go to the ATM, you get cash, you pay no fee at their specific ATMs where you don't get charged, okay? So we're living in a world and moving forward where going into the bank is a thing of the past, right? You really don't need to do it. So as long as we have that mobile banking, easy access to transfers, you see your checking account and then you see your HELOC right next to each other when you log in, and you can just click transfer out, click transfer in. So it's payments in, transfers out, withdrawals out, okay? And then your focus is doing the strategy, paying as little interest cost as possible on a month-to-month basis. And then you're just trying to avoid as many other fees that come with the product. No annual fees, no closing costs, prime rate or below prime. And when you do that, when you get an interest rate that's below prime or at prime, chances are your HELOC is going to be at a lower rate than many of your other debts, especially if you're coming into Velocity Banking with already poor credit or higher interest loans from a higher interest rate environment, right? So going back to Velocity Banking updates, I proved to you rates are going down, intro rates are coming back just by looking at 3 different states across the United States, one on the West Coast, one on the East Coast, right? And then one slightly toward the middle, right? So we got all of that to say that this is the pregame work that takes you about 20-30 minutes to do proper research, because your main debt tool is the main ingredient for that strategy, Velocity Banking strategy. That's your main ingredient. And then once you understand more about, okay, how do we make our chunk and how do we, borrow, and does it make sense for me to pay off this or that? That's where coaching and accountability and support and having a community comes into play, right? You can watch my videos where I dive into those things, into those details, using real numbers, case studies. Really helps you thoroughly. All right. Says, very valuable info. You are a huge blessing. Thank you very much. We got Shell Credit Union, have HELOC. Wonderful. Okay. First live. We got John White in the house, longtime client. We need to jump on a conversation, my friend. We got to stay in the loop, right? We've already made a couple of moves with your policy. So we just have to keep talking. It's as simple as that to solve that issue. All right, federal law requires each of the 3 nationwide consumer credit reporting companies, Equifax, Experian, and TransUnion, to give you a free credit report every 12 months if you ask for it. Yes, yes, yes. Remember to get all 3. Yes, yes, yes. That's a very healthy thing to do every single year, especially when you're about to apply for something. See where you stand across the 3 bureaus. When you call the bank, you can ask them, which bureau are you pulling from? All 3, a specific one? What's your DTI, right? Get as many questions as you can answered. Cut as many of the guessing work, right? Look at this. This is a lot of work, but it's really not, right? Because we're just taking an hour of your time throughout maybe in 20-30 minute increments, right? You're watching the videos. That'll take some more time. I would rather you put 3 to 6 months into learning and education, absorbing this strategy before running into it. Because chances are many of you make obviously easy rookie mistakes, right? Let's talk about some easy rookie mistakes, and then we're going to close out, right? Easy rookie mistakes, a lot of you make. You're like, what? So, rookie mistakes. And this is because we were rushing. I can always tell when someone's rushing. The speed of their voice when they get on a call with me, their nervousness, and their million questions about things that I've answered a million times on my videos, but they just didn't take the time, It's crazy, man. Stuff is free. But sometimes you have to pay, I think, for you to really learn. Okay, so rookie mistake number 1 is the person applies for a home equity line of credit, but they end up with a home equity loan. They thought they were getting a home equity line of credit, ended up with a home equity loan because they didn't read between the lines. They didn't read the terms. And it's not that hard All you need to look is for the word revolving. That's it. One word. If that word is in the contract, that is open-ended. Revolving meaning open-ended. Meaning I can pull money out and put money back in. That is a rookie number one mistake. It happens way more often than you think. You're like, what? How do people make this mistake? I know, it's crazy. Okay. Second rookie mistake. This applies definitely more than this. I should have put this one first. Apply and get denied. Right? When you apply and you get denied, I know, like every single time I talk to a client, get on the phone with someone that applied for a home equity line of credit and got denied, I asked them, did you watch the Velocity Banking pregame work? No. Did you watch all about the home equity line of credit in the second position, which is what you were applying for? No. Okay. That's why you got denied. Simple as that, right? You did not take the time to ask the questions that I told you to ask. You went around me, you went around the bank, thought, I don't know, you were something special to the bank. You're not, trust me. These banks don't care, okay? And you have to understand that there's less and less humans in the background handling the underwriting part of it. Less and less human interaction. So I always tell people it's very advantageous to build a human relationship, whether it's over the phone or in person. If you have the opportunity to go in person, do that so that you can meet Susie, so that you can meet Joe, so that you can meet Tom, so that you can meet Megan or Brenda that works in the HELOC department for 10 years. She's been in the same spot. He or she, 10 years, 5 years. And you ask her all the questions about the HELOC. What is everything I need to do to get approved for that tool? I'm looking to obtain that home equity line of credit, pay off debt, reduce expenses, increase cash flow, build my credit. You just said Velocity Banking without saying it, right? This is what I'm trying to solve for. What do I need? Here you go, Mr. Rodriguez. Here's everything that we need for you to apply, and here's what we like to see. We like to see DTI of this percentage. We like to see credit score of this amount. We like to see, tax returns, whatever it is, right? Get it all for them, right? And you just cut out all the guessing work. Your chances of denial are like nothing when you get everything they want in advance and you build that relationship. When I tell you, it's happened so many times because you spoke to Brenda, because you greet her by her name, you spent 20 minutes with her, right, in the meeting, and you say, okay, I'm gonna go do all these things, and you come back a month later, hi Brenda, in person, let's say, and you apply with her right then and there. Here's everything that I need. More often than you think, Brenda writes a little note to the underwriting team, hey, push this through. Hey, push this through. Hey, this person's good. I've had it happen to me numerous occasions where I get taken care of. That's what that means, to get taken care of. You took that extra time. You showed kindness. You did exactly what they asked for. You made their jobs easier. Right? It wasn't this back and forth, oh, we missed this, we missed that. No, you're making their job very easy. And so then they write a little note in the notes to the underwriting team, hey, can you push this through? This client's good for it. So nice. Very nice. Jay says, trying to book a call. It's about time. Yes, I'm looking forward to having a conversation with you. You said I'm booked until January. It's the holidays, my friend, and a lot of people are booking. You know, I'm like a hot commodity these last few weeks. Reach out to me directly if you're wanting to book a consultation before the end of the year, and I'll see if I can, find some time to get you on my calendar. But you are right, it is filling up quite a bit. So as we get ready to close out, the next action steps, you're gonna want to rewatch this if you were just jumping in. Okay, this is like a intense masterclass that we just did, looking at different banks, qualifying, and whatnot. Once you have done a level amount of pregame work, okay, and let me always remind you, you never have to pay me $1 to do this concept. I would argue every one of my clients that hired me did not hire me to just do a strategy, right? They're looking for that accountability. They're looking for that personable touch. They're looking for that in-depth conversation, brainstorming, bouncing ideas, multiple strategies, okay? So if you go right here to my website, denzelrodriguez.com, 2 options. You can book an initial session with me for an hour, okay? Charge $300. And that gives you really a strong idea to get to know me better and how I operate. You can see how I talk on the phone one-to-one with you and all the work that we do in advance, before and after the call is over, okay? Or if you've been following me for some time and you know the work that I do, you know the different values that I bring, then you work with me on a long-term basis, okay? So my lifetime program is the $3,997, okay? That could be paid one time or multiple payments, right? I urge you to do your due diligence on me first before you spend $300, before you spend $4,000. I urge you to do your due diligence on me, right? I encourage you to watch my live masterclass videos, my recorded chronological order playlists. I encourage you to do the pregame work. I encourage you to get your finances, get the base built, foundation built, right? And then once you have healthy cash flow where you can make that $4,000 investment and it's not a stretch, right? Or make payments, or the $300 hour call. And that's going to add acceleration to what you're already doing, okay? Now, there are some people that have enrolled in my program before without doing any of the work. And there's a few reasons why they do that. There's just a connection. They feel like they're literally making an emotional decision. It wasn't a mathematical one. It was a pure emotional decision. They're like, that's my guy, and I'm gonna hire him, and we're gonna go the distance together, work together for like 10, 20 plus years. It's a lifetime program. So some people, it's pure emotional. Other people, it's a spiritual decision that they feel like not just an emotional level connection, but there's a spiritual divine appointment where, like, I not only need to work with you, I was called to work with you. And I've had clients say this, they're like, I prayed and then you showed up one day on my social media feed, and that was an answered prayer, right? So I've had people just say yes because of that, because they prayed, God answered, God brought them the exact person for them, for their needs to solve for particular things, and they're just trusting their faith to move forward. Those are the top 2 reasons why you would sign up or work with me, but without doing a whole lot of due diligence or watching a whole lot of material or really doing any of the pregame work. And that's okay. Like, I have people that I work with where we do the pregame work together and I still have them watch videos, so that can cut down the times when we're actually on the call together, or there's more tactical stuff that we're doing. But that's really the only two reasons why you would sign up before what I'm telling you to do, what I'm encouraging you to do. Logically, do your homework on me, Google my name, right? Like, look me up, spend some time on my YouTube channel, look at other videos, see how I operate, see how I communicate with other clients, with other YouTube channels, see my reputation out there, ask around. You can ask me, say, hey, is it possible for me to talk to one of your lifetime clients? More than I've done that before, okay? Just reach out, just ask. So on my website again, that's where you take the next action step, where we can take our business offline, right? So you go to the website, denzelrodriguez.com, you go to book a call. I've got resources that you can do, and then there's contact, where you fill out a contact form. I also have a free community where I host private workshops when my technology wants to work, right? And I've got pre-recorded stuff in there that's free to join. These little things to kind of just build that trust online, okay? And it's important to verify the link, denzelrodriguez.com. So also verify that you're on the right website. That's also extremely important. Can I tell you a quick story before we go? I had a client, well, I just made him a client recently. I had a client before they became a client. They're a client now. They got scammed $50,000 because they thought they were working with Denzel. They thought they were working with me, but they were not. So that's the other problem nowadays is, and this has been going on for years and years, but it's going to be increasing more and more. And now it's closer to home for me personally, where I'm like, holy crap, like this is possible. So I have someone that they were on Instagram. On Instagram, I have 5 fake accounts, people that are impersonating me. They pull all my content and then they repost it on their account. So what happens is that fake account goes to my real account. They see my followers, they click on my followers, and they DM all of my followers. And now my followers think that they're talking to me. So they get to chatting, right? And then that person will say, let's take this conversation over to WhatsApp. On WhatsApp, that's when they start to ask for personal information, social security number, bank accounts, you name it. Once that happens, you are screwed, my friend. Okay? And it baffles me. It gives me a mean headache that people still get scammed today just off that. I'm like, where else on planet Earth do you have to give your social security number, your bank account routing info on a WhatsApp through text? Like, where else on planet Earth do I need to do that to purchase something? When you go on Amazon, you put your credit card. You have to have an account. You go on Shopify, Etsy, eBay. You go on a website. There's never anyone DMing you in the back and then telling you to go on WhatsApp, right? So that's automatic scam. I'll never ask for your banking details via DM. Not going to do that. I'm going to send you a legit invoice through Stripe or PayPal that everybody in the planet knows Stripe and PayPal. Okay? That's how I'm charging. And then it's my website, denzelrodriguez.com. So you have to make sure that when you're looking at the social media accounts, on YouTube it's easy. No one's impersonating me on YouTube. That's hard to do. It's a waste of time. On Instagram, it's more advantageous because they can just follow my followers and DM my followers. And it also happens on Facebook and maybe a little bit on LinkedIn with all the spam DMs and stuff. But let me tell you, it's getting a little more advanced now. So this person that got scammed, the person that was committing fraud, they pulled audio from me. They were able to pull my voice. And I don't know if they're using AI or whatever, but they were able to use my voice to send audio messages to the person, to send them money, to apply for a HELOC, right? So they used my content in DMs to show this person how to apply for a home equity line of credit. And they did it and they got approved. So that proves that, you know, my content will help you get a home equity line of credit. But I didn't want to do it in that way, right? So that happened. They used my voice, they used my content to get that person to get a home equity line of credit. And then they said that they would consolidate the debt for him, right? So I do not consolidate your debt. I've never shown that before on my YouTube channel. Never did that before, okay? But that's what happened. That person gave their account and routing number of their home equity line of credit, transferred into what they thought was my account, and I was going to go out and pay off their debts, and that didn't happen. Now, what did happen was they were receiving money, and that's part of the scam, because that's how they keep you in, is they'll start sending you checks, right? So they actually send you money, but then they take it all in the end. So they might send you $5,000 a week or whatever. You're getting all this free money. And then one day they took all the money back plus more. And that's what happened. They ended up taking $50,000, maxed out the guy's home equity line of credit, and he's negative cash flow. And so we're working together. So I have a video coming out soon that's going to show, you know, how we're recovering from that scam. So just know that if you want to work with me one-to-one, please just verify the website that you're on. If you need to email me directly, hey, Denzel, I'm trying to purchase your program. Here's the site. You know, I gave it to you. That's what it looks like. That's the link in the name. That doesn't change. Okay? With that, wish you all a blessed rest of your evening. And we'll be talking again soon. God bless you. And I think I have a video like premiering right now at the same time. So you can check that out as well. Or it might have been done by now, because I went on and on and on, but I think it was really, really important. So I'll close it out here. Thank you all. Look forward to hanging out with you, talking with you one-to-one, and I will most likely go live a few more times before the year's over. Okay? God bless. Have a good day.